Most traders think scaling to 7 figures in capital, $1 million of capital, is a complete fantasy and a pipe dream. But the truth is, there's traders doing that. There's traders far exceeding $1 million worth of capital. So in today's video, I want to show you and make you realize that you're not as far off trading 7 figures as you think. I'm going to show you my exact step-by-step process that if I was to take on a one-on-one client that wanted me to help them scale to 7 figures, this is exactly what I would show them. In fact, it's exactly what I have shown my clients and students. Like, for example, this trader or this trader or these traders who are not far off the $1 million mark. This is the same outline and curriculum I have in my mentorship program. And it's really the same structure that I see over and over the most consistent and most successful traders are following. So let's get into it. Now, I want you to comment below your biggest trading psychology issue right now. I want to offer you some guidance. Okay, here it is. My step-by-step process of taking you from $0 to 7 figures in capital. Now, the first thing you need to do is you need to run your numbers. Many traders come up to me and say that I want to be a millionaire. I want to make $1 million from trading. And I ask them, do you know your numbers? Do you know your average monthly return? Do you know how much capital you need to have with your average monthly return to get the dollar amount you want to make $1 million? And they say, no, I don't know how much I'm making on average. I don't know how much capital I need. So I ask them, if you don't know exactly where you are, how can you strategize to go from where you are to the goal you want to achieve? And the truth is, most traders just have a fantasy of making $1 million or trading $1 million worth of capital. And as a result, they never get there. The statistics for trading are so low because most traders don't give it a proper shot. They don't have a step-by-step methodical process that they can follow to help them go from where they are to where they would love to be. And that's exactly what this video is about. It's about giving you that methodology. So firstly, you want to run your numbers. Figure out over the last 12 months, if you have 12 months of trading data, figure out your average monthly returns based on that last 12 months of data. And then let's say, for example, you want to be making $10,000 a month consistently from your trading. And let's say, just for example, you're making on average 5% per month over the last 12 months. Now, if you want to make $10,000 profit on average per month, then how much capital do you need with your average returns? Well, you need $200,000 worth of capital. So you want to reverse engineer the process. You want to know the numbers so you know where you're working towards. And then you want to figure out, okay, maybe you have $10,000 worth of capital right now. So the difference between where you are and where you need to be is $190,000 worth of capital. So you want to be asking yourself the question, how can I get that $190,000 worth of capital? Well, you can take on a $200,000 prop firm challenge. And if you pass that, you've now got $210,000 worth of capital. And then you have to factor in profit splits. And with that return of on average 5% per month, you're close to that $10,000 in monthly income on average. So my point here is you need to know your numbers. You need to know where you want to get to, where you currently are, and the strategy to go from where you are to where you want to get to. For example, if you want $1 million worth of capital, you need to know where you currently are. You need to know how many funded accounts or what private investment, where you're going to get it from, how you're going to get it, what's the strategy, what mechanical trading plan you're going to use, what on average is that returning, and then how long do you need with those average returns to pass the prop firm challenges to get that type of allocation. You need to know your numbers. So the first thing I want you to do, if your goal is to get to a certain amount of funding, or if your goal is to make a certain amount of consistent payouts, sit down and write down with your current capital and with your current average monthly return, what goal capital do you need to have in order to achieve that? And if your current returns are in the negative on average, well, then you need to work on refining that and ensuring you're testing and ensuring you truly have a profitable edge, and then ensuring you're actually sticking to that, which we're going to cover in later points here. And then ensuring you have the proper mindset so you can stick to that. So I want you to figure out where you are, where you want to get to, and what the difference is, and write those numbers down. Because if you don't know your numbers, there's no way you're going to get to achieving this particular goal. It's just a fantasy. You haven't run the numbers yet. Then the foundation of being a 7-figure trader and consistently pulling payouts from the market is all about your trading edge and your mechanical trading plan. So after you know your numbers, you need to make sure that you have a profitable edge. I've mentioned on this YouTube channel maybe a couple times now that there was a trader I was working with, and for many years he thought he was trading a profitable edge because he never did the testing, he never gathered the data to see if that was actually true. And he came to me with an enormous amount of frustration, thinking that the problem was his trading psychology. But when I went through the basic checklist that I work through with traders, and we went through and we made sure, firstly, he had a profitable edge. We found he didn't. The data showed otherwise. So he wasted years and tens of thousands of dollars trading this strategy he thought was profitable, but the data showed otherwise. He wasn't trading a profitable strategy. So before you find yourself in that situation of wasting years and tens of thousands of dollars, just make sure you go back and do some back testing. Make sure the trading strategy you're trading truly has edge. And you don't need to overcomplicate it. You only need to know where you're getting into the market, your entry, and you need to know when you're getting out the market, your exit, your management to get out. And you want to keep it simple, and you want to test enough data to see that this particular strategy is actually profitable. Now, I like to take this one step further, especially with traders I know have big ambitions to trade a lot of capital, especially if they want to get to the 7 figures. After they have this back-tested data to prove they have a profitable trading strategy, I then want them to go back with that edge and that mechanical trading plan that they've just proven apparently, and go back through back-tested data, and I want them to try and disprove the strategy. So instead of trying to find evidence to support why their strategy will work, I make them flip a switch in their mind, become devil's advocate of their own trading strategy, and try and find every single reason their trading strategy won't work and it won't sustain. And what we're doing with foresight is we're figuring out any problems that are going to arise at larger amounts of capital. So these traders can be prepared for these, and we can plan contingencies now and action-based processes now so that they don't have to find out these challenges later with more amounts of capital, but they can figure out what those are now and they can plan for them. And I worked recently with a trader who was very polarized, and they thought their strategy was the holy grail. And many traders do. They get caught in confirmation bias because in their trading strategy and in their trading community, that's all that's going on is this talk about how good the strategy is. People post their wins, they hide their losses, and then you get caught in this echo chamber thinking that your trading strategy is only profitable. It's only going to bring you wins. And that's not the case. Every trading strategy has a drawback, it has a shortfall, it has a risk. So I humbled this trader a little bit, and I made him go back with his trading plan and go back through the data and test that data, retest it, but this time with the other mindset, with being devil's advocate, trying to find everything wrong with that strategy. And he came back to me a week later and he said, Pat, there's nothing wrong with my trading strategy. So I went and did it myself. And I went back through back-tested data and I pointed out multiple periods in the last year when the market conditions shifted where the strategy wasn't profitable. And I showed him that you were selectively choosing out market conditions and trades that only supported your trading strategy. But when you're caught in it, when you're trading every day and you don't have that broader perspective of being backtesting and looking at all the data, you're going to be taking trades in these different market conditions and you're going to be taking losses in these situations. And he said, shit, I didn't see that. And I said, no, because you were so enamored and you're trying to prove why your system worked as opposed to getting an objective perspective on your system. So when he was aware now that his trading strategy had drawbacks in a certain market condition, we then said, okay, what contingency, realistic contingency can we put in place to manage that in that situation? And we added an additional higher time frame filter to pay attention to the market condition before he went to the lower time frames to trade. And then we also, when it was in questionable market conditions, we also put a contingency in his trading plan to reduce risk. So in those questionable conditions, he was trading reduced risk. So he was now prepared for this contingency that was always going to come true, but he wasn't aware of it. And I would rather traders do that when they're trading lower capital than when they're trading larger capital. Because when you're trading larger capital, there's more on the line. And really, you want to think about your $10,000 account, your $100,000 account, even your $500,000 of account as educational lessons and tuitions you're paying for to become a 7-figure trader. Because everything you learn along the journey and those losses you take are helping refine your processes and your mindset and bringing to surface any holes or gaps you have in your processes and mindset so you're prepared to trade 7 figures. That is, if you look at those losses productively. If you beat yourself up over those losses, then it's just wasted tuition. But if you look at it from a perspective of this is education, this is me going through my university degree of becoming a profitable 7-figure trader, and each step is me learning lessons to a greater degree because the losses are bigger and I'm paying more for them. Okay, so different perspective, maybe useful. But the focus is making sure you truly have a profitable edge and then disseminating that into a mechanical trading plan. Entry, exit, risk management. We'll talk about this in a second a little bit more. But you want to take all the pressure off yourself. You don't want to be umming and ahhing and thinking, oh, what should I do in this situation? When you have a lot of money on the line, when you're tired at night and you have to make a decision, you want to make sure your mechanical trading plan is step by step and it's a checklist. If all components are ticked off, you trade. If they're not, you don't trade. Simplify it. Make your life easier in the future. You'll thank yourself for that. Now, once you know your numbers, you know what your target capital is, for example, you know you truly have a profitable edge, which by the way, all that means reward to risk risk of 1-to-1 with a strike rate of at least 51%. Obviously you want it greater than that, but that's still profitable. And then you have disseminated that edge into the entry and exit models you're going to use, and you put into a mechanical trading plan and a checklist. You're now ready to make money as a trader. So you think. But the issue now is that as you start to trade, you realize that fear and greed are introduced into the process. And I first experienced this about 7 years ago. I started trading about 9 years ago, a little bit more now. And early on in that journey, I wasn't trading large accounts. And I had a strategy, and I was trading that strategy on these smaller accounts, and I was doing really well with it. For 2 years, I mastered the technical components of a particular strategy, and my percentages were exceptional for the month. And then I went off and I picked up my first round of private investment. It was a $100,000 round of investment. And I thought I could continue to replicate those results on that larger amount of capital without doing any mind work, without doing any inner work, without working on my psychology or putting any processes in place to ensure my psychology was there to trade that strategy successfully. I had an edge, I had a mechanical trading plan, but when the capital increased, there was now greater greeds. I could get more from the market, so I thought. I could make more money, which not only meant more money in my bank, but it also meant all the opportunities and things I could buy, so I thought, with that money. And you increase your greed in your mind, your expectations of what you're wanting from the market, because now you can, all of a sudden with one win, you can now pay your rent or cover bills for 3 months or get a nice watch or pay the financing for the month for your new shiny car, whatever it is, or take your family and friends out for dinner or go on a nice vacation. So you start to build up the story in your mind about what you think the outcome of the trade is going to give you on larger amounts of capital, which, by the way, introduces a greater degree of fear, because now you fear missing out on those things, and you also fear the loss, the opposite of those things. So the moment you create a greed because of greater capital, you simultaneously create the fear of missing out on that and the fear of loss of that. You can't separate fear and greed in your mind. And those traders who've been through my free Bulletproof Your Trading Mindset 2.0 course know that. They know the simple contrast laws that I teach in my program, in my free program, and you have the tool to be able to manage that so you don't fall victim of that and you can stick to your trading plan. Those of you that don't have it, there's a link in the description, completely free. But my point is that the more and more you trade, the more and more capital you trade, the more and more managing your psychology, in particular greed and fear, it becomes more valuable, because now there's more on the line, there's more reason to. So the next step here, after you have your edge in your mechanical trading plan, is you need to create a good pre-trade mindset. This is what my Bulletproof Your Trading Mindset tool helps you do. If you don't already have it, it's the 2.0 version, completely new and updated. And then you need a good post-trade mindset. Now, if you have a good pre-trade mindset, then that's going to help with your post-trade mindset. Because if you're going into a trade thinking it's going to make you $1 million and that's going to get you a new car and that's going to get your ex-girlfriend back and that's going to get all this crazy talk, this story, this narrative you create in your mind, then if you take a loss in that trade, you're going to be extremely disappointed and devastated, because you not only lose the trade, but you also lose all the expectations you associated to the trade. And you're now extremely depressed and feel challenged and feel betrayed by the market, not because of the market, but because of your own unrealistic expectations you're holding on the market. So if you have a good pre-trade mindset, it helps significantly with your post-trade mindset. But still, whenever you get caught in greed and the self-exaggeration after wins or fear after losses, then you need a good mindset to bring yourself back to a state of equilibrium, or lift yourself out of the pit to back to that state of equilibrium, so that you can come the next trading day undeterred by the previous trading day's wins and losses and just stick to your trading plan. So you need a good pre-trade mindset, which is what the Bulletproof Your Trading Mindset tool does. And you need a good post-trade mindset. And then on top of that, you also need to address the subconscious mind. Very few traders ever get to doing this, and as a result, very few traders can sustain trading consistent payouts on larger degrees of capital over a long period of time. Many people think that they don't have mindset issues or challenges until they become traders. That's simply not true. Throughout your life, you accumulate charges and they get stored in your subconscious mind. Anything you have in your awareness around you gets stored in the subconscious mind. And the subconscious mind is like this shadow in your mind that you're not consciously aware of day to day, but it still runs you. There's a great quote by Carl Jung. He says, until you make the unconscious conscious, it's going to run your life and you're going to call it fate. So people don't even know what's logged in the subconscious mind. But when they become traders, what happens is you take a loss in the market, and it's not the loss that pisses you off, it's what the loss represents and resurfaces out the subconscious mind and is making you face in front of you. Maybe it's a guilt and shame of the past, or a strong resentment of the past that's logged in, maybe in schooling or in childhood, or in a previous job that you perceive to have lost, or certain investments, or a certain marriage, or a boyfriend or girlfriend, or whatever it is, that resurfaces now, and you're reliving the pain of those subconsciously stored associations that haven't been addressed. So as well as having a good pre-trade and post-trade mindset, you need to go into the subconscious mind and address that. That's what I talk extensively of in my mentorship programs and in one-on-one coaching. But most traders don't go that far. But those that do, they do really, really well. Okay. Now, after you have your numbers, your edge and mechanical trading plan, your mindset on point, which now allows you to consistently stick to your edge and your mechanical trading plan, you now need to structure all 7 areas of life. Because here is your game plan to consistent profitability. Having an edge, managing fear and greed so you can stick to that edge. That's going to get you consistent profitability. That is until you have issues in your relationships, or you have health issues, or you have stresses in your mindset, or you have issues at your work or your job, or you have stresses with your personal finance, or you have external social pressures, or you just don't feel fulfilled by your trading anymore and you feel like it's lacking purpose. So if you have issues in the other 7 areas of life, they're going to affect your ability to trade successfully. So as well as having a profitable edge and then having the mindset that allows you to stick to that profitable edge and manage fear and greed, and you address the subconscious mind. By the way, the subconscious mind can be addressed. People just don't know how to. And you can go back to specific moments and you can broaden your perspective over those specific moments, not by making anything up or justifying things, but you can go back to a specific moment that's logged in the subconscious mind. You can ask yourself a good set of questions to broaden your perspective of it, to make yourself aware of information that was there but is in your unconscious. And when you bring it to surface, you broaden your perspective and you realize that idea you were holding, that narrative or that story you were running about that particular event, has been only an incomplete awareness of that event. But when you resurface the unconscious information that's there but you've been unaware of because of your survival bias, and you can resurface that unconscious information and make yourself aware of it, the story changes. So you can address the subconscious mind, and it's critical to do, not only as a trader, but just going through life. Because otherwise you're going to be run by your subconscious mind, these stored associations. You're going to be run by the external world, fearing the gain of the negative, fearing the loss of the positive in your mind because of all the associations in your subconscious mind. You're never going to get clear on what's important to you and pursue that. You're just going to be run by external people and external events your whole life. You're going to be reactive as opposed to active. Okay, so that can be addressed. Now, then you need to go in there and structure all 7 areas of life. You need to have a calendar and life structure. You need to figure out what's important to you in all 7 areas of life. And then you need to go off and you need to set high priority actions so you'll perceive yourself empowering those areas every day. You can also take all 7 areas of life and link them to your trading. You can make yourself aware that when you go and trade every day and you have your trading community, that's part of your vocation and your finances. That's what energizes you and makes you feel healthy and fit. And that's your mental stimulation because you're learning about trading, and that's your family and relationships, the people in the trading community. And then maybe you go and help other people learn to trade, so that's your social contribution, and that's fulfilling to you. So you realize that you're going off and empowering all 7 areas of life just by going off and trading. So some traders do that and they're aware of that, and they don't feel like they need to compare themselves or subordinate to any ideas of how they should be in the other areas. They just figure out what's important to them and they structure the life around that. But either way, you need to make sure you take care of all areas of life so you don't have external stresses and challenges in those areas that affect your trading. Then after that, you need to go in there and you need to leverage. If you have $1,000 to your name, then trading $1 million seems very far away. That is if you're thinking 2-dimensionally. But if you realize you have opportunities to take advantage of prop firms, and you can take your 1,000, you can leverage it to 100,000 with a prop firm, and you can get payouts from that, and you can use that to reinvest into your personal accounts. And then you can use those payouts to reinvest into more prop firms. You can build multiple prop firm accounts with multiple different companies. You can get to $1 million very quickly, okay? Or you can use those payouts from prop firms and, you can build personal accounts. And then you can go off and you can pitch private investment. You can take on board investors. If you have proven results and a long enough track record, people are going to throw money at you. So there's no issue with leverage ever. The issue is with these first 4 things. You take care of these 4 things, guess what? You become the asset that everybody throws money at. There's a great video on YouTube of Stuart Wilde where he talks about the mastery of money. And he says, when you raise your life force and you become more energy, meaning you become the asset and everybody knows you have that skill of being a profitable trader, then people are going to climb through, they're going to come through the doors, they're going to climb over the roof, they're going to find their way, they're going to want to give you money because you're the asset, you're the one who can multiply their money. So you then want to leverage, and the leverage opportunities are plentiful. There's plenty of prop firms out there. There's plenty of opportunities to leverage private investment if you do it safely, if you have good risk management, and you are the asset. Now that brings us on to risk management. I've seen more traders blow accounts and blow funded accounts than they have grown them. So I am more conservative with my risk when I share than I am aggressive with risk, because I've seen the numbers skew. Okay, so what I encourage every trader to do, especially those that are on the path from 6 to 7 figures, and when they get to 7 figures, most definitely you need to have some sort of a drawdown protocol. And what the drawdown protocol does is, let's say for example you have a prop firm that has a 10% max drawdown or a 6% max drawdown. The closer you go from break even to that max drawdown, you want to start to scale down your risk so that instead of taking 10 consecutive losses and hitting max drawdown, from 0 to -5, you're risking 1% of the account, so $1,000. And then from -5 to -7.5, you half your risk, you're now risking $500, 0.5% of the total account. And then from -7.5 to -10, you're now halving your risk again and risking 0.25% of the total account, $250. Instead of taking 10 consecutive losses and hitting max drawdown, you now go from 10 consecutive losses to take to 20 consecutive losses. And you're just increasing the probability of holding on to that account. But more importantly, you're creating more space in the psychology to manage fear and greed so you can stick to your trading plan consistently. And that's where I see most traders go wrong. They go into drawdown a little bit, they panic, fear and greed accentuates, they deviate from their plan, they revenge trade to make it back, and it goes kaboom, okay? So what I encourage you to do is to have a drawdown protocol to scale your risk down to protect your psychology so that you can stick to your trading plan. Once you have all this in place, you can get to 7 figures. I don't want to say easily, but relatively easily. It's not that complex to do. It's simple to do. It's a step-by-step process. But do the step-by-step process and you're going to get there. I've seen it over and over and over. Now, when you get to, high 6 figures, 7 figures, you want to really start thinking about diversification. I was awoken to a text from one of my mentorship students and one-on-one clients who put all their eggs in one basket into my Forex funds, max allocation, 600,000. He was making a good amount of monthly payouts from that, and kaboom, they went under. It's a prop firm that nobody thought would go under, but it did. And he lost his full stack, 100% of all his capital. Okay, so when you get to the mid to high 6 figures to 7 figures, you want to start thinking about diversification. Diversify across 3 different prop firms. Start opening some personal accounts. Start looking into private investment. Start diversifying. And what this means is it takes pressure off your shoulders and stresses off your shoulders. And it also means you're not at the mercy of one prop firm. If one goes under, great. You lose 33% of your stack as opposed to 100% of your stack. And then finally, you want to continue to expand your vision. If you have the end goal in your mind that all you want to be is a 7-figure trader, you get there, great. You want to figure out, all right, what's next? Because if you reach the end in your mind, you're not going to have any more motivation and discipline to show up. You're going to be complacent. You're going to find a way to not do the action steps that got you there in the first place. You're going to lose all that money. So you need to continue to expand your vision. And really one of the best ways to continue to expand your vision is to continue to expand your social network and continue to hang out with people that are doing much better than you. If, for example, you are a 7-figure trader managing $1 million worth of capital, and let's say, for example, from that you're pulling, let's say $50,000 a month, okay? You're pulling $50,000 a month, right? By convention, standards in society, that's an exceptional amount of money to be making. Most people don't make $50,000 in a year, okay? Now, if you're caught in that mentality, I'm not trying to say it's not a lot of money because it is, but if you're caught in that mentality thinking that this is exceptional and you get really proud of that, you're going to fall victim to the self-licensing effect, which says whatever you get incredibly proud of, you're then going to give yourself permission to do something that you're ashamed of. And usually what happens is traders, they get really, really proud of trading that amount of capital. They then become complacent. They then force low quality setups into the market because they exaggerate themselves, they minimize risk in the market, and they get humbled by the market. So if you're in your mind exaggerating how good you are for making $50,000 a month, it's usually a good indication that you're not surrounding yourself with people that are killing it, that are doing really, really well. And because if you now all of a sudden put yourself in an environment where people are making $50,000 a week, then the mentality changes of, you know what, I'm doing good. I'm grateful for the amount of money I'm generating, and I'm incredibly grateful for the work I put in and what this allows me to do. But there's no point exaggerating myself about that, being really proud of that, because so-and-so has been in that part of his journey 3 years ago and is continuing to push himself. And I want to do the same thing. I want to be grateful for what I'm making now, but realize there's still more. There's still people out there that are doing great things. And it's about keeping yourself grounded, grateful, but grounded for what you have, so you don't fall victim to becoming complacent, thinking it's the end, thinking that you've made it or anything like that. If you treat your trading like a never-ending journey and you continue to push yourself and you continue to expand the vision, you'll continue to generate income from your trading. By the way, it doesn't have to continue to be pushing yourself financially. You may get to the point where you're very comfortable financially from the money you're making, but then you want to think about, all right, how can I create deeper purpose behind this money? And you create a deeper reason why behind the money. For example, some sort of foundation or philanthropy. So you have continued motivation and drive to continue to do the action steps that got you there in the first place, and you don't become complacent to those. Because the moment you become complacent to the action steps that got you there in the first place is the moment you're on your way down. Now traders, if you found this useful, make sure you like and subscribe. It keeps you up to date with all my content. And before you click away, check out this video that's going to pop up on your screen. It's going to blow your mind in terms of trading psychology. It's going to give you a model that's critical for your success as a trader.